Ladies and gentlemen, good day and welcome to Repco Home Finance Q3 FY22 earnings conference call hosted by Elara Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Shweta Daptarda from Elara Securities. Thank you, and over to you, ma'am.
Thank you, Zed. Good afternoon, everyone. On behalf of Elara Capital, we welcome you all to the earnings conference call of Repco Home Finance Limited to discuss the Q3 FY22 performance. From the management, we have with us today Mr. T. Karunakaran, COO, Mr. N. Balasubramaniam, CDO, Mrs. Poonam Sen, CGM, Mrs. K. Lakshmi, CFO, Mr. Subramaniam Balaganpati, DGM Finance. Without taking much of the time, I now hand over the call to Mr. Karunakaran for his opening comments, post which we can open the floor for Q&A. Thank you, and over to you, sir.
Yeah, thank you. Good afternoon, everyone, and a very warm welcome to Repco Home Finance earnings conference call for the quarter ended December 2021. During the quarter, we witnessed the third wave of COVID-19. The Omicron variant caused temporary restriction in some parts of our country. In addition, the third wave also caused some of our potential customers to put their plans to construct their house on the back burner. However, the situation has since normalized, and we expect business activities to strengthen going forward. Disbursements declined 9% sequentially. Lower loan disbursement at 443 crores during the quarter, and elevated repayments at 18.4% at the rate of annualized caused the loan book to decline about 1% sequentially. On the profitability side, we reported strong loan spreads and margins at 3.8% and 5.0%, which are significantly above our guided levels of 3% and 4.3% respectively. I attribute the same to our superior risk-based pricing. The profit before the provision line declined 7% year-on-year to 119.2 crores in Q3. Despite a higher than average provision charge of rupees 76.5 crores to the P&L, we reported a profit of rupees 31.5 crores. We believe that the provisioning cycle has peaked and will normalize starting the next financial year. We reported a ROA of 1.1% in Q3 of current financial year as against 2.63 in the corresponding period of in the last year, and an ROE of 6.2% as against 7.3 in last Q3 of FY21. We believe this is an aberration, and we will go back to above 2.2% ROA and above 15% ROE soon. GNPA provision coverage ratio before considering the RBI circular improved to 45%. Overall, ECL provision now stand at 3.5% of the loan book. The balance between our exposure to the self-employed and the salary segment stood at about 51.3% and 48.7% respectively. The share of non-housing loan, that is LAP, in the loan book stood at about 18.8%. Cost to income ratio stood at about 19% in the first 9 months of current financial year. The total capital adequacy ratio remained comfortable at 31.3%, which is a provisional. Our retail network is comprised of 155 branches and 22 satellite centers. Liquidity continued to remain robust for us as we carried over 400 crores of cash and cash equivalents at the end of December 2021. In addition, we had around 2,000 crores of unutilized line of credit from banks. Now, I will summarize the key financial highlights for the 9 months ended December 2021 before the opening the floor to Q&A. Total income declined 7% and stood at about 982.3 crores. PAT declined 33% owing to higher credit costs and stood at about 149.5 crores. ROA and ROE stood at 1.7% and 10.1% respectively. Loan book stood at 11,785.7 crores. Core profitability remained strong with strong spread and margins of 3.8% and 5%. NPA before considering the RBI circular stood at 4.6%, having risen marginally from 4.3 in September 2021. I'm happy to announce that Ms. K. Lakshmi has joined the leadership team as the company as CFO. In addition, our new MD and CEO is expected to join us later this month. Thanks all of you for joining the call. Happy to answer your question now.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. First question is from the line of Akash Jain from Moneycurve. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. I have a couple of questions, and please pardon the frustration of some of us as investors, because I think there has been a lot of disappointment on the growth front over the last many quarters. Like every quarter in the Concall, we have been guiding for 600 plus crores of disbursement in the quarter, and every quarter subsequently we have had disappointment. So I'm just trying to understand where has the gap been, whether it has been in the problem with the assessment of what is on the ground from the management team, or problems arise which we have not anticipated, because every quarter in the last few quarters they have guided for growth. In the subsequent quarters that has not come. So I'm little not really able to understand what is happening. Why is the actual number so different from guidance every quarter after quarter on growth? So that is one part, sir. The second part is on provision. So there has been obviously an RBI mandated change, which obviously today they have come back and said that you have more time to implement it. But how much of that provision has impacted provision for this quarter? The reason I'm asking for is this, because currently now the provision is based on ECL, right? So even if the headline GNPA number is higher, has it translated into higher provision because of the change in RBI norms? And if the RBI's norms would not have changed for this quarter, would our provisions have been lower? And just a corrected question to this is, given the fact that this is going to anyways be implemented in a few quarters from now, are we making changes in terms of our collection process, in terms of educating our clients, in terms of trying to change the whole process of collection so that the headline number doesn't look so high when it's finally implemented? Thank you so much.
If I'll answer the second question first. On a stage 3 to stage 3 basis, our incremental increase has been around 45 crores. So assuming a coverage ratio of 45%, the provisioning would have been around 20 crores and not 76 crores. So answer your second question. Of course, the incremental provision would have been lower, lot lower. And to answer your first question, see, we were in the phase of transitioning. We tightened the credit norms and we're doing less risky loans. when this COVID pandemic hit us. So we are at a stage where we're not able to go back, not able to move forward as well. So which is why our disbursements have been subdued. But we hope that with the management change, the disbursements will come back to pre-COVID levels from Q2 of next financial year.
Yeah, we have seen some positive signal from our field. Logins are improved, and we are expecting sizable disbursement in current quarter.
So did we take a more risk-averse approach in the last few quarters? Because we have been one of the few HFCs which have had challenge on growth. A lot of other NBFCs and HFCs are also talking about the balance transfer out to banks and the suffering because of that part. But to us, at least our company has suffered a lot more than the other HFC that I follow. So I don't know whether that's particularly a issue with our kind of customers and the fact that our rates to our customers were higher, so they are more lured by the lower rates of banks, because our rates are certainly on the higher side than other HFC that I follow.
It has more to do with our assessment of the situation. We did not expect things to normalize so soon. Which is why we were cautious with cherry-picking loans, to put it simply.
Yeah, because of this deferment of the NPA norms for a few more quarters, are we going to write back the provisions we have made in this quarter in subsequent quarters, or the incremental provision will then adjust accordingly?
No, we are not going to make any reversal in provision in current financial year. We will review the situation in next financial year in Q1. Based on that, we will take a call. Right now, we don't have any plan to reverse the provision.
And you didn't answer my question in terms of the process, so that when it gets implemented after a few quarters, do you see the elevated levels of GNPA to be there, or the collection process will be tightened such that the GNPA doesn't go up when the norms get implemented?
Of course, the collection process will be tightened, but it's really hard to say now where the number will land up. But in terms of peaking out, the number has peaked. 7% is the outer limit we want to be.
Okay, thank you so much.
Thank you very much. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. Next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Sir, this is with regards to your statement that you have been cherry-picking
Mr. Gupta, sorry to interrupt, but your voice is slightly low, sir. Can you speak a bit louder?
Is it better now?
Yes, thank you very much.
Okay. So, sir, as you just said that you have been cherry-picking the loans. But, last quarter, when the call was held in the middle of last quarter, we were told that Q3, the disbursements are going to be around 1,000 crores, not just for Q3, but also for Q4. And that was when half of the quarter had already passed. And now you have posted a number which is like 45% of the guidance for the full quarter. So how do you read that sort of a statement coming out of your company, wherein when 50% of the quarter is gone, you are guiding for a number which you are not even able to achieve 45%. So you are behind by a large margin. So obviously, I don't think that you were in the mood to cherry pick when you said that. Second is, you had also said that 3.5% is going to be the gross NPAs for the end of this year. Again, this was a guidance made in the last Concall itself. And you are saying that the economy has normalized much faster than your expectation. Still, even if you look at your non-RBI gross NPA numbers, they have actually gone up. So how do you make sense of your statement that economy has normalized but your gross NPAs have gone up significantly in the matter of one quarter?
There's a seasonal color to our asset quality. The NPAs went up slightly to 4.6%. However, we expect the pre-RBI numbers to come back below 4% in Q4. And regarding your first question, that was an internal target with our old MD, Mr. Gupta, spelled out. Our guided target was not 1,000 crores. It was more around 600 crores, of which we are falling short. Yes, we agree.
Sir, but what are the reasons behind it? Why we are consistently falling short of our guidance? Is it because on the ground we are not able to capture the customers? Or is it because we feel that our strategy is wrong? Because earlier also in one of the calls it was said that now we will be focusing more on growth than margins. But still we see the names are inching up, but your growth is lagging behind massively. So is it a result of a wrong strategy, or is it because of lack of execution on the ground, or is it because something else? Because ultimately the numbers are telling that the performance is very, very, very poor. So if that is the case, then if we are cherry picking and we are not growing, then at least our gross NPA number should be looking good. But I don't think in the last 2-3 years, you have seen any benefit. Even from last year to now, there is no benefit on the gross NPA number. So even if you are cherry picking, then gross NPA number should improve. That is also not happening. If you are not cherry picking, then growth number should improve. That is also not happening. So what is happening, sir?
The asset quality performance of the book built after 2018 is excellent. The NPAs are lower than 2%. It is the book built before that that is creating temporary problems. As we have demonstrated again and again, we don't lose money. We have not lost much money in our business. We lost around 9.5 crores till date. So we are confident of recovering our money, but with a time lag. And sorry, we lost the first question. Can you please repeat?
My question is basically, is it a lack of execution on the ground or a wrong strategy? Which is leading to us,
even in the phase of transition when this COVID pandemic hit us, we had tightened our credit norms, credit policies as well. We were cherry picking our loans, and now we are at a juncture where we are not able to go back nor move forward. So we hope that this phase will be over in the next couple of quarters, and you will start seeing improvement from Q1 of next year.
Sir, when you have hired a new top management in terms of both CFO and CEO, you obviously would have had some discussions to understand, how the strategy should be going forward. So if you can elaborate a little bit on what is, the thought process of growth and margins, and how do you plan to grow? Is it because of more branches? Is it because of something else which needs to be changed? I think previously we were also trying to change a lot of internal processes. I don't know what happened to that and where do we stand there. So if you can, at least give some thoughts on how you are going to do things differently which will lead to different results, because obviously, nothing has changed in the last many quarters.
One reason that we have found out is our ticket size has not grown at all, even though loan accounts have grown. One thing that we are looking to do is to increase the ticket size slightly by 4 to 5% per annum. Second is we hope to do business with larger DSAs. Today we are working with smaller DSAs. Larger DSAs will access to better accounts and a large number of proposals. We hope to tap that. Plus the new MD will bring his own ideas which we will implement.
Okay, sir. Thank you and all the best.
So, thank you.
Thank you very much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. Next question is from the line of Saurabh Dhole from Trivantage Capital. Please go ahead.
Yeah, sir, good afternoon. A couple of questions from my end. I think in the previous call you had guided that by March 22 you'd be around that 13,000 AUM mark. So I'm assuming you will miss that target. Is that the right assumption?
Yeah, by a mile. Yeah.
Okay. And so second question is on slide number 13 of your presentation, where you're talking about the provisions for stage 3.
Yeah.
Yeah. So what I'm unable to understand is how is it that the stage 3 provisions, both post as well as before RBI circular, is same?
The total provision is the same.
But that doesn't seem right. So what you're saying is that the assets that have come under NPA under the new circular, you had absolutely no provisions on that.
Sorry?
So what I'm trying to understand is that the assets that have come into stage 3 under the circular, which is 823 crores,
Okay.
which is of course higher than 547 crores. So the additional assets that have flown into the gross stage 3,
Right.
could also change the provision figure also, right? Stage 3 ECL provision.
No, but we'll have to account that provision in stage 3 also, because we are reporting as per in IFRS. We have to find a way to accommodate that also.
No, so what I'm trying to understand, what I'm trying to get to is the net stage 3 number, which is gross stage 3 minus the provisions. So what I'm...
No, as a matter of prudence, we provided more as per ECL. Yeah.
So, but sir, the point is that if new assets are flowing under gross stage 3, the provisions that you carry on these new assets should also get added to the ECL provision stage 3 figure, right?
This is stage 3 as per the RBI circular.
Okay. So why hasn't the provision figure changed?
The provision is the same. What we're trying to highlight is provision as per the new circular is this, and coverage is 30%. Had there been no circular by the RBI, and had we increased the provisioning, our coverage would have been 45%. That's what we're trying to highlight. That's it. It's not that the same provision is there for same.
So that,
is there for both.
so let's assume.
Offline, please?
Yeah, I'll come up. Thank you, sir.
Oh, thank you. Yeah.
Thank you. Next question is from the line of Anuja DJ from Elara Capital. Please go ahead.
Hello.
Participants, it seems we have lost the line for the current participant. To ask a question, please press star and 1 at this time. Next question is from M. Agarwala from Phillip Capital. Please go ahead.
Yeah, couple of questions, gentlemen. One is about your borrowing cost. How should we look your borrowing cost going ahead, given the fact that in this quarter we have seen an increase in cost of fund sequentially, whereas most of the peers have continued to show decline in cost of fund. And this is against the backdrop that your total borrowing continues to come down. So can you try to enlighten us?
Yeah, right now borrowing cost stood at 7.10%. We are not expecting significant increase in current quarter.
So incrementally, if you were to go to the market today and borrow, what would be that cost, sir?
It will vary from bank to bank. Right now, and on average, we are borrowing at close to 6.9%.
Okay. The next question is about, can you quantify your stage 2 asset and corresponding provision?
Yeah, we are not disclosing that, Manish.
Fine. Other bit is about in the slide where you have given segment-wise GNPA, which is based on pre-RBI circular. Can you give the same number based on current status?
Yeah, that is post RBI, right? Circular.
Yes, post RBI, yes.
For housing, it will be 4.1%.
Yes.
Okay, I'm sorry. For housing, it will be 6.3%. And for home equity, 10.2%.
Okay.
For salary, 3.8%. And for non-salary, 10%. Total being 7%.
Okay. And in your OPEX, is there any one-off there in this quarter?
CSR spends of 1.8 crores this quarter. So our CSR spends are back-ended, not throughout the year. That is responsible. Plus,
we have seen some increase in traveling costs. Last year, because of pandemic, there is no much travel. This year, we started to traveling. We are visiting branches. We are conducting a lot of training programs. So traveling cost is slightly higher compared with previous period of the same year. Mala rightly said, COVID also we made a substantial provision this 9 months period to comply with CSR new guidelines. These are the two items which caused a slight increase in administrative cost compared with the previous year.
And finally, from my side, has there been any interest impact on interest income because of this NPA recognition? Because your interest income has come down, on a sequential basis. So just trying to understand if there is any adjustment there.
No, we are following Indian accounting standard. There is no impact on calculation of net interest margin. We have not reversed any interest.
To the extent we have provided 76 crores, we have not booked any income on that.
Fine. Thank you. That's it from my side.
Thank you. Next question is from the line of Kunal Shah from ICICI Securities. Please go ahead.
Yeah. Hi. So with respect to the appointment of CEO, so if you can just let us know the process and what board would have really looked into at the time of appointing, and maybe between the internal as well as the external, how should we expect as it's gonna come very soon, as early as the next month? Yeah.
Sir, we will discuss this on offline, sir.
Okay, sure. No, so the overall thing was maybe in terms of the growth. So when do we see? Obviously, most of the questions are around growth. So just wanted to get a sense in terms of where would maybe under the new management would there be any change with respect to the growth strategy? And in fact, even on the growth, okay, what maybe would there be any differentiation between the way we used to approach the salaried versus the non-salaried? Would that tend to change, or maybe in terms of slightly lowering the rates and getting equally competitive? So what could ideally be the strategy out there?
Kunal, we feel it will be better if the new MD talks about these things. It's a question of waiting for 3-4 weeks more, and we'll organize a call, hopefully.
Okay.
Yeah, very difficult to answer on his behalf.
Yeah, no, but I think maybe board's perspective would also be helpful when they were selecting the candidate, okay, and maybe not sure if it's coming from outside, then would it be more from private entity or a public entity? That would also help a bit, okay, if that can be explained, yeah.
None of us are privy to whatever happens inside the boardroom.
Okay.
Okay. Yeah.
Oh, okay. So that won't be. Okay, sure. Yeah. So that's helpful. And secondly, in terms of so now with RBI clarifying this, and we have made 25% provisioning on the incremental pool. So ideally, what would be the stance going forward for next 2-3 quarters? I don't know if I missed that, but would we look at maintaining that provisions? Would likely reverse it? what's going to happen with that pool which has got created? And one last question is, any pool wherein there could be further write-offs which can be expected over and above what we had seen it in Q3?
Yeah, right now we don't have any plan to reverse the provision whatever we made till date. We will review the situation in Q1 based on the next financial year Q1. Based on the developments, we will take a call on reversal of provision. Right now, I'm not in a position to make any comments.
Okay. No, so what would be the overall pool? Maybe there was some stress which was there in the earlier lab book. We always highlighted that the focus is on the recovery, invoking the SARFAESI and maybe getting the money back. But there is still some write-offs which have been happening. So is there scope for further write-off, or maybe we should see the recovery coming through? What would be the stance on that entire stress pool? Which is, I think, largely provided. Yeah, it's largely provided. But the only thing was maybe whether it will be a write-off or a recovery over a period. Yeah.
See, this quarter we have done a technical write-off of about 40 crores. It's only a technical write-off. If you look at the actual principal write-off last 20 years, we have done to the extent of only 10 crores out of the total disbursement of 26,000 crores. 10 crores is nothing. We have made a sizable recoveries in technical as well as this financial write-off. Yes, we are having a set of a pool consists of about 10 to 12 crores. We identified already for technical write-off. Depending upon the numbers in going forward, we will decide. It is not
pre-decided. Yeah, but maybe nothing as high as 40 odd crores which was done this quarter. It would be like 10, 12 crores or so. Nothing major left out there, yeah.
Definitely not.
Okay. Yeah. Thank you.
Thank you. A reminder to the participants, to ask a question, please press star and 1. Next question is a follow-up from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Sir, just one clarification. So on provisions and write-offs for quarter 3, so you are saying against 17 crores that we had last quarter, if RBI circular would not have come, you would have given a number of around 20 crores here. Is that right?
Correct. Thereabouts.
So 56 crore is the addition because of the RBI circular.
Correct.
Okay. And what would be the interest reversal because of the RBI circular?
So under IFRS, we are allowed to book interest on loan accounts net of provisions made. So, so incrementally we made around 76 crores of provision. So we will not have recognized any income on that. That will be reversal. Yeah.
No, you haven't recognized the income on the incremental NPA pool, right?
Not on the incremental NPA pool. Yeah, I'm talking about the incremental provision pool.
Okay. But what would be the impact on the revenue line because of this RBI proposal, RBI circular for quarter 3?
So, see, under IFRS, under the previous year, yes, we are not supposed to recognize income on non-performing assets. But under IFRS, there's no concept of non-performing assets. So we recognize income on all assets, subject to net of provision. Yeah.
So the total impact, just to understand, if RBI circular was not there, the total impact on your PBT is 56 odd crores.
Yeah, correct. Correct.
Okay, sir. Okay. Thank you, sir.
Thank you. Next question is from the line of Anuja Bige from Elara Capital. Please go ahead.
Yeah, hello. Hi. So I just have 2 questions. First is about the customers which have led to the asset quality deterioration. So what is the profile of this customer? Is there any geography specific concern? And second question is actually about the overall loan book. So what is the share of fixed rate loan book in the book? And can you give us some guidance about the lending yields? What do you think? So where will they go going forward?
It's in NPA, it's a mixed rate, so salaried as well as non-salaried. If you want in terms of percentage, I'll give you. As of 31st December end, out of 7% of gross NPA after affecting RBI circular, salaried class accounted for 3.8% and non-salaried class accounted for 10%.
Okay. Okay. And so I ask, and second question is about the fixed rate loan book in overall AUM. What is the percentage of fixed rate loan book and floating rate loan book?
We don't have any fixed rate loan book as of now. Our entire loan book is linked to floating benchmark setting of floating interest rate.
Okay. Okay, fine. And also about the margin improvement, we are seeing a marginal improvement in our NIM. So how sustainable is this improvement?
NIM right now, our limit is 5%. It's not sustainable. Going forward, see the annual average NIM, if you look at last 8 or 6 quarters, it's about close to about 4.2% to 4.6%. Our NIM going forward means number will in the range of 4.2 to 4.5%. The existing 5% NIM is not sustainable.
But it may not happen immediately. Yeah. But
Okay.
our long-term target is to achieve a NIM of 4.3 to 4.5%.
Okay, okay, that's helpful. And the last question is about the ticket size. You have mentioned that the average ticket size has not grown in the loan book, but what is the exact average ticket size at the moment?
I'll tell you. It's around 15 lakhs on the book.
Okay. Okay, and what was this last year, same quarter around?
It was 14.6. So same, it was the same, 14.6 lakhs, same.
Okay, okay, thank you. That's it from my side.
Does that answer your question, Anuja?
No, that's it.
Thank you. As there are no further questions, I now hand the conference over to the management speakers for closing remarks. Over to you.
Thank you for joining the call. Yeah. We look forward to interacting with you again. Have a good day.
Thank you. Ladies and gentlemen, on behalf of Elara Securities, that concludes today's conference call. Thank you for joining us, and you may now disconnect your line.